I trust that you guys get this, right? Let me just use my razor here. So don't worry too much. But what is missing is what should concern you, right? But I don't have this. I don't have the machine hours, the total machine hours, which I will need to find out, right? I don't have the total labor hours. I will need to find out what is the total labor hours. I am provided here with the labor hours and the machine hours. They are here. Product A, B, C, and D. I'm provided them. And I'm provided the volume. So what should I do? Because I'm already provided with everything. What then should I do? Anyone can tell me. You see this silence? Very dangerous because you just need to look at the volume multiplied by the quantity. The volume multiplied by the quantity. And you add them up together. Plus the volume for product C multiplied by the quantity. The volume for product D multiplied by the quantity. And you just add them up together. Simple as that. The same thing is for the total labor hours. You will do the same thing. You take the volume, multiply by the quantity. Volume, multiply by the quantity. Volume, multiply by the quantity, and then you add them up together. Does that make sense, guys? And once you have the total here, then you know also that for you to get the apportionment, you take what is total budgeted overhead cost divided by the budgeted quantity. As simple as that. So then you will get these two missing. Does that make perfect sense, guys? As simple as that. So when you look here, so we need to do this summary, and that's what absolutely need to be done. Volume multiplied by the quantity, plus volume multiplied by the quantity, volume multiplied by the quantity. This is going to be for product A, for product B, for product C, and for product D. Just like that. The same thing you do for the labor hours. Volume multiplied by the quantity, volume multiplied by the quantity, volume multiplied by the quantity, volume multiplied by the quantity. Guys, do you get this repetition? But what we wanted to find out is what will be the total hours. Do it quickly. Once you know what you need to do, the rest is just doing your calculation. And obviously, as I always say, double check your calculations because there could be something that you added up wrong, right? But show your words, write it down. Don't write it down on the paper. You write it down so that I know that this is what you were doing, right? So with this total, now that you have the total here, right? So you have 535,000 and then you have 630,000. Then what you can do is you can find the apportionment, right? And check here. That's exactly what they're doing. That's exactly what they're doing. Now that they have the total budgeted quantity, right? They take this total budgeted overhead cost divided by what? By the machine hours. That's all. So you take the machine service cost divided by the machine hours. That's it. That's the reason why you would get the rent amount per machine hour. This is your cost driver because you need to find what is the cost driver for machining, for assembling, for setups, for ordering. Remember these two, you had to calculate them. You had to find first the unknown because you did not have the quantity. You found the quantity, you calculated. For these three down here, they're easy because you just, like I said again, I repeat, this divided by this, right? 54 54K divided by 500 will give you 108 rand per setup. Guys, does that make sense? So that you can find your cost drivers rate. And that was the question that was asked of you. Find the cost drivers rate there. But even more, since you have the cost drivers rate, please, can you go ahead and do us the pleasure to find for only product A and C, not for product A, B, and C. So my best students know that they're not going to waste time with product B and C. They will just make a quick table. They have the three musketeers, they have the direct labor, they have the volume, right? Volume multiplied by the cost. You remember again here, I'm going back here because some of you would say, well, I'm missing something there. Look, the direct material is given to you per unit. The direct labor is given to you per unit. It's just taking volume multiplied by the cost per unit. Volume multiplied by the cost per unit. Volume multiplied by the cost per unit. So if you, for A, for example, if you take 32,000 divided by 19, multiplied by 19, what do you find? Calculator, please. 32. What do you find? Please put it down there in our chat. Multiply by. Do you find that? There we go. Then can we move on? So when you have your calculator, you can say, okay, what is my second musketeer there, which is the direct labor? 32. What are you going to do? 32K multiplied by what? By 10. So then you find what? Your direct labor. All right? So these two will already be taken care of in a heartbeat. Your direct material and your direct labor, easy to do. Do we agree? Any thumb up, please. So no time is wasted. The only thing that remains for you to do is this calculation down here. And remember, you've already done the major part. You have the cost drivers already. What you're going to do is you're going to multiply for product A. You're going to multiply the 32K volume multiplied by this amount in order for you to get the machining, this amount in order for you to get the assembling, this amount in order for you to get the setups, this amount in order for you to get the processing, this amount in order for you to get what? The purchase cost. And once you have all of them, you just add them up together. All right? And a table is meant for that. You are not to be writing it down. Do a table. A table is quick. A table makes you able to structure everything in one place and not to miss something. Right? Oh, sorry, my bad. There's a mistake that I make there. Guys, there's a mistake here. Let's check here. What we are provided with regards to the setups, just a second there, is in this table. I spoke too fast. It is in this table here. And that was the reason for this table. Obviously, we are dealing with product A and product C, right? So you are provided this here. So you will take the number of, let's check it again here. Look at the setups. You multiply the cost driver, multiply by the number of setups. And the number of setups is already provided to you because this year is the number of setups. So this is actually the estimate that was provided to you to say the number of setups for product A will be 90. You calculated the cost driver for the setups. So you just multiply the cost driver by the number of setup. Very sorry for rushing here. Here, I was trying to give a quick example of, and I made a mistake. Are we clear about this? So these 3 years, that was the purpose of them being provided in their own place here. So you're looking at the setups, the order processing, and the purchase orders. Are you guys clear about this? Once you calculate the cost driver, you are just supposed to multiply the cost driver by the number of setups, the number of customer orders, and the number of supply orders. Are we clear, guys? My bad that I was rushing here with my thing about repetition, volume multiplied by quantity, volume multiplied by quantity. I'm sorry about that, guys. But that's the part where you need to know your theory. And nobody corrected me, right? So are we clear about that? You are provided the number of setups. They provide it to you. But they say they budgeted. Remember, the budget, let me clarify this so that you understand the logic clearly. Before we budget, because we're not going to be calculating the cost driver, the rate per cost driver during the year. Remember, in finance, we are always planning ahead. And that's why we will budget. We will say, okay, the total setup based on previous months or previous years is generally around this amount. And normally we have 500 setups. So you will use what is budgeted and the cost driver that is budgeted to multiply by the actual estimate for the actual year or the actual month. So these that you are seeing, these are actual. So meaning that during that month or during that year, the setups were for product A were 90. So you will take what is the cost driver, the budgeted cost driver, multiply by the actual setups, right? And that's what you see they have done here. So from setups, order processing, and order purchasing, as you can see, it's clear. You take the cost driver. For order processing, it's 25. So you will take 25, multiply by what? By the number of, so that is for order processing, right? Order processing, how many orders are there? Orders. Sorry, guys, I need to just remove this because we are not seeing even the amounts here. All right, so it's 9,500. Are we clear, guys? So for product A, it's multiplied by 9,500, multiplied by 25. Make sense? Are we good? Tami, Tandekile, Taylor, Ciara, are we good on this? We're good on that. So, however, when it comes to machining and assembling, right, you can see that the total volume was multiplied by 2 for machining for product A before being multiplied by the cost driver. My question to you is, what does that 2 stand for? Why did they multiply by 2? Let me make it easy. Remember, you always need to have the paper in front of you. You will see it. Ciara, where is Ciara? She spotted.
The machine hours per unit.
That's right. Remember when we were calculating the cost driver, we are calculating the cost driver per machine hour. Per machine hour. I repeat again. It is for 1 machine hour. But we know to make product A, they need 2 machine hours to make 1 product A. I'm not saying to make all the product A, they need 2 machine. No. To make 1 product A, they need 2 machine hours. To make 1 product B, they need 5 machine hours. So you will take the per machine hour, multiplied by the 2 machine hours that it takes to make one product, multiplied by the volume. Multiplied by the volume. Because in actual effect, what moves with the volume? What moves with the volume is what they provided you in this table. Because these two very much move with the volume. As you can see here, per unit. Order processing has to do with the orders. Purchase has to do with the purchase orders. Setups has to do with the setups, not with the actual units. Are we clear, guys? So this is the part where you practice. So practice this part because I can see one of you making the mistake and just taking the volume for the machining, just taking the volume multiplied by the cost driver rate. That's it. And you are like, yeah, I got it. But you have to remind yourself, this is so important. What is the actual machine hours per unit? So guys, I know this can be scary because you know you got it right, okay? But in any case, because you're showing all your works, it's going to impact your total product cost, yes, if you make a mistake. I will be able to see that you only made a mistake here, but I don't want you to make that mistake because you're going to lose this 1 mark here, and you're going to lose maybe half a mark here. Do you see that? So it's going to impact you. But the good thing is that when you show all your works, you only were losing 1.5. If you're not showing all your works, then that's trouble. So guys, don't panic too much, but we want you to get it right. But you will lose a little bit, but you understand that you are allowed to show all your works. Are we clear, guys? Now I'm scared now. You guys are too quiet. Can we move on? Can we move on? Otherwise, I'm so scared, right? Okay, now you have these. These are the easiest questions you will get because you are seeing opening balance. Remember, we've done this throughout the year. We've done this. You can see an opening balance here. Oh, sorry, you can see an opening balance. And then you have the transactions that happened, that took place in February. And then you have the closing balance. This is good. What are they asking you? The production cost statement, the trading statement. Easy. If you know your theory, you know, oh, this is easy because I know I need the 3 musketeers here. You know that. For the product cost statement, I need the 3 musketeers. For the trading statement, I only need 2 things. What do I need? I need cost of the cost of sales for the product sold. Remember that cost of sale, but for product sold, not for the product manufacturers. You remember that, guys? I was insisting on that thing. So I know I will need the revenue minus the cost of sales, and that's it. And then I get what is the profits because we want to find out what's the trading there, right? And the only thing then they're asking me, show your works, show your notes. For the 3 musketeers, direct material, direct labor, manufacturing overhead. Show us your notes. You need to show the notes for this. And you know what is the notes? Guys, you see when you study, you see how easy a question like this becomes? Because you know, by the way, the notes will always be opening balance, the actual direct material that we purchase during the the material itself. So, and what else? The closing balance. So my question is, what is going to be plus? What is going to be minus? That's my question. When you are taking your notes for direct material, what will be plus? What will be minus? I'm so worried. So worried.
Can I
Guys,
answer, sir?
is there? Where?
Can you hear me?
Oh, I can't see. Did you write the answer?
No,
We
I don't
couldn't,
know
we
what's
didn't
going on
hear
with
you,
my
Sarah.
microphone. Sorry.
Yeah.
So you would add material that you bought and
Yes.
take away material that you sold, I think, or that went to the
No, no, no. Remember, you have an opening balance.
work in
You have an opening balance and you have a closing balance. Which one do you add? Which one do you minus?
minus the closing balance.
Minus the closing balance, plus the opening balance, minus the closing balance. That's what I need from you guys. So you need to know what you're doing. So let's say, for example, let's look at, you know how you're going to need to categorize everything. But let's start, for example, with the direct material. You will start with the opening balance. You can see the opening balance here. You will say, if someone was going to ask me again, oh, but how did you find the opening balance? I'll be very frustrated. But I just want to show you. You can see that the direct material has an opening balance. You can see that the work in process has an opening balance. And you can see that the finished good has an opening balance. So if direct material has an opening balance, we check, does direct material has a closing balance? No, it doesn't. It doesn't. So we need to find it because of what? Because clearly they showed us here. This is a sign to you that you will need to find what the closing balance is. Are you guys understanding? So every time you see a question mark, it means that no, don't neglect this. You need to find it. All right? You can see what took place. This is the opening balance. This is what took place because remember, we have the net purchase. We purchase material. And then we have the railage. You have to add everything that is freight, railage, and all that. So you can see here, railage on raw material needs to be added to raw material purchase. So you can see the raw material purchase. So this is direct material. So when you're looking at this, sorry about that. Don't know why it's slippery here, but you have your direct, this is direct material, clearly raw material purchased, right? What else is raw material? I'm just browsing quickly. I'm checking raw material purchase here. Raw material purchased on credit, right? So this is direct material. You categorize first, and you only have three categories. Your three categories are direct material, direct labor, manufacturing overhead. For example, this is the direct labor, as simple as that. That's all the direct labor you need to think about. All the direct labor are here. That's it. You just add them. There is no opening balance. There is no closing balance. For direct material, you only have these two things plus railage. Don't forget, sorry. Don't forget the railage. Don't forget the railage because you need to bring that material to the actual manufacturing, right? So direct material, direct labor, manufacturing overhead. So this is direct material, only three things. So what are the manufacturing overheads? Rent, electricity, indirect, they wrote it here, indirect material, depreciation. What else? They they give it to you again here. They say indirect. Where is my mouse? Indirect labor. not direct. Everything that is indirect. Insurance, stationery. No. Why? Why must I not take into account stationery? Because next to stationery, they said office. So I cannot take that into account because it has nothing to do with the production. Are we in agreement, guys? Sure. What is happening here? Because they said office, salaries of administrative staff. I can't take that into account because it has nothing to do with. So you can see the rest is just adding them up together. That's all you need to do, guys. That's all that you need to do. You can see opening, let's purchase, relage, right? Direct labor, what we found there, you just add them together. Factory note. Can you imagine that these are the notes that you need to produce? The last notes that you need to produce will be this one, the cost of finished goods sold. Remember, because I repeated that last time to say you need to distinguish between what is manufactured or produced and what is sold. Not everything that is sold is, sorry, not everything that is produced is sold. Remember here, there's an opening, you add the opening, you minus the closing. You add the opening, you minus the closing. Still does not answer our question. How did they get the closing inventory? Because if you check properly, they gave us something. What did they give us?
The
Are you guys
cost of
seeing?
the direct material. So you basically have
That's
to work
right.
backwards.
You have to work backward. All right, Ciara, thank you. All right, guys, do you get it? So if they give you, you see this, I repeat again, in your exam, if you see this, question marks, it doesn't mean don't care about it. They want you to work it out, all right? They want you to work it out. And as simple as that, they want you to work it out. Guys, one also of the things, because I'm just rushing because our time is really has run out. But let me touch on maybe what else could be important here. So once you have your three musketeers in your actual production cost, right? So you have your direct cost, remember the direct cost, and the manufacturing overhead, 1, 2, 3. They come from your notes, these notes, right? 1, 2, 3. You add them up together, you get the total manufacturing cost, right? So once you get the total manufacturing cost, you need just to add what is the opening and what is the closing. They will provide that to you. They provide to you the opening and the closing working process. Check here. This is the opening working process, and this is the unfinished good on hand. They provided you with unfinished good on hand, and then there's the finished good on hand. Um, do you check here? Let's go back. Where is it? Sorry. Do you see here? The closing work in process. The closing work in process, it means that it is unfinished. Do you understand that part? It's unfinished. It's still, we are still working on it, right? So at the end of the period, it is not finished. So that's why we need to minus it because this is not finished. And that's the reason why they could have written this unfinished good on hand as work in process, the closing balance of the work in process. But another way of writing it is unfinished good on hand. Do we agree on that? Unfinished good on hand. Finished good means what it is. It finished, right? Finished, meaning it's ready to be sold, right? If you check at the trading balance, I told you, the trading balance, you're going to do good things. Sorry, two things. You're going to look at this amount here. So this is the cost of production of finished goods. We have put it on the table. We have tallied everything. At the end of everything, we have, this is the cost of finished goods. But what we are looking for, it's the cost of finished good sold. We need to find out what was actually sold. All right? Once you get the cost of finished goods sold, then you can calculate your gross profit. Does that make sense, guys? Any questions on this? This one, especially this one, I would ask you to practice it, right? And if you have any questions or something is amiss, please send it in our chat, right? But the finished goods sold is going to be collected. No problem, Tammy. It's going to be taken from the last one, the last note. I told you there's the Three Musketeers note, direct material, direct labor, factory overhead. But you mustn't forget the cost of finished goods sold note. In order for you to find the cost of finished goods sold, it's just you take the opening inventory of finished goods plus the cost of finished goods produced. Remember the first cost of finished goods produced, this amount here. It's coming straight from the production cost statement. The production cost, production. Production gives you the total production. So what you're going to do is you take the opening inventory of finished goods plus the total production for this period minus the closing inventory of finished goods. Does that make sense here? You see this one? The finished goods on hand, finished goods. So if we have finished goods on hand, and I want to reason again with you, for some of you who might be struggling, if we have finished goods on hand, what does that mean? In fact, that solves everything for you to understand this note, the last note. Why do we do this last note? And why this last note is very important. If we have finished goods, finished good produced on hand, what does that mean? It means that they were never sold. Can I repeat that, guys? And I'm speaking to the entire class. If we have finished goods on hand at the end of the period, it means that we didn't manage to sell them. And now you can understand the reasoning of this particular note, why it's so important. Is because we want to find out what was sold. All right? So we take the opening inventory plus what we produce. Opening inventory means that what came from last period. Opening inventory, what came from last period that was not sold. We add them up together with what was produced this period, and we minus what we will remain with at the end of the period. Sierra Tandekile, does that make sense? Of how you get the finished goods sold. So it is this finished goods sold that you are going to use in your trading. You are not going to use this. You are not going to use this, the goods produced, the total production. You're not going to use this. You're going to use what was sold. And that's the reason why you need to do sales. And when you do sales, you must do sales minus any sales return. So if they provide you a sales return, you need to minus it. Look here, they provide you with the total sales. Sales for the finished good is this amount. But they also provide you sales return. Keep in mind, sales minus sales return will give you the net sales, right? So you'll always need to know that. And if you've been through the entire semester, you know how to make the distinction. You're not gonna be, lost in the exam. Because if you see sales return, it should tell you already, wait a minute, if they return sales, I need to minus that because it's not the net sales. I need to find what the net sales is, right? Minus the cost of finished goods sold, that will give you the gross profit. Does that make sense, guys? Because the secret for direct material is here. So I want to finish with this. I'm going to finish this session with this very important thing. Remember your direct material notes. I want to use another color here to bring this to your attention. They provided you this direct material issued to the factory. What that means is that even though they purchase things and all that, what they issued for the actual production was this amount here. And that's the reason why we said it is a given cost. And that's the reason why we use this amount to calculate, to work back the closing inventory. So check if they say this direct material was issued to the factory. It means that for the production, they only needed this amount. That's the total they needed for the production. They might buy, I don't know how many things. They might buy 1 million rand worth of material. But you need to check, did they use the entire material or did they only use maybe, let's say, 200,000 rand worth of material? So check, and this kind of statement will tell you what you need to know. Direct material issued to the factory. Sierra, Pandekile, Telly, does this make sense? So look, if you have a question like this in your paper, do not panic. This should be an indication to you. Let me repeat again. Direct materials issued. So meaning for this production, they only needed, this was the total they used. And that's the reason why we had to work out the closing balance. Look at the closing balance here. We had to work it out. And as simple as that, we add up everything together. And this was the total, right? You remember that this was the total for direct material. And we are going to take this total minus the what was issued, the actual total. You can see this is greater than this one. That's how we managed to work. So guys, I have emphasized, I have re-emphasized, I have emphasized again to make sure that. So your homework by looking at this paper will be to now do this question 5. Very easy. I would like you to work on this question 5. And please, in our chat, I want especially the people who attended this session to let me know that they have figured out question 5, the last question, because unfortunately, we are already 15 minutes over the time. Unless you guys are willing for us to go through this. We can go through this. I don't have a problem. But I'm just saying for recording purposes, I don't want such a very long recording which will bore the entire class. So I would rather stop the recording here. But guys, you are welcome to stay and to ask any question about right about now that I've stopped the